Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we are going to discuss about the disposal of amount due to the retiring partner. Right now we have already studied what all is included when we calculate the whole amount which is due to the retiring partner. Okay, his capital amount, interest on capital, the drawings amount we deduct, interest on drawings we deduct, then we add the premium on goodwill that we pay, we make the effects of this revaluation gain or loss, or else any kind of there is accumulated profit or loss. All these adjustments we made, and we get to know how much we need to pay to the retiring partner, right? But now the question is how we will pay, right? The first situation, pay cash up the amount immediately to the retiring partner. That's it, what it is. Okay, if this is amount is due, you pay directly to the retiring partner. So the first situation is pay immediately. Okay, pay immediately. The second situation could be like, now the firm say, okay, we are not having sufficient balance right now. What we can do, we can pay you in installments. Okay, right now we cannot pay the whole amount. Every year we will pay some kind of a money in installments. Okay, so the second situation could be in installments. Okay, and the third situation could be, they could say, okay, we are having not sufficient amount of balance, right? Not so much, but we can pay you partly in cash now, and part of the amount we will pay you in installments. So the third situation could be partly in cash and partly in installments. Okay, these could be the three situations, right? Now all these things, how the payment is to be made to the retiring partner, is already mentioned in the partnership deed. I hope you remember what is a partnership deed. Okay, right, everything is mentioned, like how much to pay, how to pay, and when to pay. Everything is mentioned in the partnership deed. But if at all it is not mentioned in the partnership deed, then Partnership Act says that as per the Partnership Act we have to pay. Like they say that you have, if you cannot pay, the first situation obviously as per the Partnership Act is you pay the cash immediately to the retiring partner. But if you cannot pay immediately, and if you are paying in installments, or if you are paying next year, whatsoever the case may be, you have to pay interest at the rate of 6% to the retiring partner, or share in the profit, like how much amount of the capital is being invested by the partner in that particular firm. Based on that proportion, based on the proportion of capital, you need to share the profit with that retiring partner. Let's say, like there are three partners, right? A, B and C. The profit sharing ratio is 2:1. C retires. Right now, amount due to C is 1 lakh. Amount due to C is 1 lakh. First situation could be pay interest at the rate of 6%. Okay, what is the 6% of 1 lakh? 6,000. Or else they can share the profit in the ratio. Let's say the firm earns a profit of 80,000, right? So this is the profit that the firm earns. Now how much is the capital? 1/5 of the capital is being invested by the partner in the firm. Okay, 2:1, 1/5. So 80,000, 1/5 of 80,000 is how much? 1 5s are 16, 5s are 80. It's equal to 16,000 rupees. Okay, the share in profit. Otherwise it's already mentioned in the partnership deed that if you are paying in installment, how much interest you will pay. Everything is mentioned in the partnership deed. If at all it is not mentioned, if it's not there in your question, you have to pay interest at the rate of 6%. Okay, now the thing is, what journal entries you will pass for the same. Now let's say in the first situation, when you are paying the cash immediately, first and foremost what we need to do, we need to close the partner's capital account, right? So we will close the partner's capital account. What entry we will pass? We will debit its account. So C's capital account debit 1 lakh to bank account. Okay, you can't pay cash 1 lakh, right? So to bank account 1 lakh rupees. Fine. Now the second situation could be, it could be cash, it could be certain assets. Okay, it's not necessary only cash they pay some asset also. Okay, the second situation could be in installments. In installments means you are considering that partner's amount as a loan. Now he is no more the partner of that particular firm. Okay, but still the amount is pending. Okay, he becomes a third party liability for the firm. So now you consider that particular capital amount of partner as a loan. Okay, so what you will do, first you will close its capital account. First you will close the capital account, because now he is no more the partner of that particular firm, and now he is a liability for the firm, for which the firm has to pay. So it is considered as a loan amount, and we will open a seize loan account 1 lakh. Okay, fine, we opened this particular loan account. And the third situation could be, you pay this third situation, you pay partly in cash and partly in installment. So again, first we will close seize capital account, debit 1 lakh to bank account. Let's say 50% they are paying immediately and 50,000 is due, so we will consider as loan amount. Okay, so 50,000 will be the loan amount. Correct. These are the entries we will pass in the initial period when the partner retires. Okay, when the partner retires, we need to pass this. Now we have considered this as a loan. Let's say 1st April he retires. Okay, so 1st April we consider it as a loan amount, and at the end, like at the end of the year, when the year ends, now we need to pay a certain amount. Let's assume we are paying the whole amount after 1 year. Okay, so we used this amount of capital, and it is mentioned that if it is considered as a loan amount, you need to pay in the partnership deed, let's say at the rate of 10% you need to pay. Okay, so the next entry after this will be at the end of the year. Okay, we used this amount. Maybe he retires in the mid of the year, so we will consider that proportionate amount as an interest. Okay, so first, interest is an expense, so interest account debit 10% of 1 lakh is 10,000 to seize loan account 10,000, right? And now we will make the payment, the loan amount as well as the interest amount. So entry will be seize loan account debit 1 lakh 10,000 to bank account. Okay, 1 lakh 10,000. Okay, if we are making the partial payment, we will make the entry of that partial amount only, right? So this is what, even if this is the situation will be seize loan account debit 50,000 to bank account, 10% of 50,000 is 5,000, so we will pay 55,000 to C if it is considered as a loan, and if it is mentioned in the partnership deed that you have to pay interest at the rate of 10%. Okay, so this is what the journal entry we will pass, and this is how we will make the payment. Now there are 3 situations in which the firm will make the payment. Okay, if it is considered as a loan amount. The first situation could be the yearly installment. They are paying an yearly installment plus interest. Let's say they are making payment as 4 yearly installments plus interest at the rate of, let's say we will consider the 10% amount. Okay, so this 1 lakh we are making 4 equal yearly installment. Okay, mind it, this is the phrases which is being used, which you need to understand. So 4 yearly installments you are paying, that is 25,000, as well as you are paying interest at the rate of 10%. Okay, so we will open, let's say, seize loan account, we will close seize capital account. I am not making exactly, okay, you can make it, right? So seize loan account we will prepare. This is debit credit. This is the amount column, right? This is the amount column. So first we need to close seize capital account. What will be the entry? Seize capital account debit to seize loan account. So on the credit side we will say seize capital account 1 lakh. Fine. Now this is at the first year. Okay, this is the first year when we are making the payment, right? So first year, 1st April, we make the entry, and on now we are paying at the end of the year. Okay, end of the year we are making a partial payment of 25,000, but we used this 1 lakh for the whole year, so we need to pay interest on 31st of March by interest account at the rate of 10%, that is 10,000, and 31st March we will make the payment. So to bank account, how much we are paying? 25,000 plus 10,000, 25,000 plus 10,000 interest, that is in total we are paying 35,000 to C. Okay, now we will close this account 1,10,000. So the balance carried down is how much? 75,000, right? 75,000, 110 minus 35 is 75,000. Okay, and this will be the balance brought down by balance brought down 75,000. Now 75,000 is due, we have not paid, we will pay at the end of the year. So on 31st of March, that is in the second year, this is the second year we will make the payment. So by interest account, this 75,000 the firm was using for the whole year, so they need to pay interest at the rate of 10%, that is 7,500, and on 31st March they will make the payment. So to bank account, how much they are paying? 25,000 the principal amount, this is the principal amount, plus 7,500 the interest amount. So in total they are paying 32,500. Okay, now how much is due? 82,500. 31st of March to balance carried down is 50,000. 82,500. Okay, so third year, this is the third year. On 1st April the balance brought down is 50,000. Okay, balance brought down is 50,000. Again at the end of the year we'll make the payment of interest. So interest amount is due. How much is due? 10% of 50,000 is 5,000. How much we will pay at the end of the third year? To bank account, 25,000 plus 5,000, that is 30,000 we are paying. And to balance carried down will be how much? To balance carried down 55 minus 35 is 25,000. Okay, and in the fourth year, the last installment we will pay to C by balance brought down is 25,000, and at the end of the year we will pay by interest account. Interest amount is due of 2,500, and the final payment is made to bank account 25,000 plus 2,500, that is 27,500. Okay, this is easy. This is how you will make you will prepare C's loan account and make the payment to C in 4 yearly installments plus interest at the rate of 10%. There could be a situation that at the mid of the year he is retiring, so just mind it when you are calculating interest. Let's say he is retiring on 1st of July. Okay, so how many months you are using this 1 lakh amount? For 9 months. Okay, so for 9 months interest you need to pay to C. If he is retiring in the month of October, so for 6 months half of the interest you have to pay. Okay, so that you need to keep it in the mind at what particular time this partner is retiring. Based on that you will pay the interest. Now the second situation could be, again, let's say we will consider that we are paying 4 yearly installment, but how much in the second situation it is specified, like how much we will pay to, see, let's say we will pay 30,000, 4 yearly installment of 30,000 we are paying to, see, including interest, this include interest, this 30,000 include interest at the rate of 10%, right? It's not say that we will then pay interest, we are paying 30,000 and then on the remaining amount we are paying interest. It's not mentioned like that, but this 30,000 includes the interest amount also. Okay, so let's say this is the first year, and okay, now first year the amount due is 1 lakh. Okay, fine. How much is the interest amount? At the rate of 10%, 10,000 is the interest amount, right? How much you are paying? 1 lakh, 10,000, oh, 10,000 in the interest amount, 30,000. Okay, this 30,000 includes this interest amount also. This 30,000 is inclusive of the principal amount as well as the interest amount. So how much is due now? 110 minus 30 is 80,000. Fine. Okay. Please you prepare this in this way, in a particular way, the ledger account of C's loan. I am just explaining you, so that is why I am preparing it in such a way. Okay, now in the second year, how much is due? 80,000 is due. Okay, we used this amount for the whole year and we need to pay interest at the rate of 8,000. Oh, at the rate of 10%, that is 10% of 80,000 is 8,000. Okay, so how much we are paying? How much it is said? 30,000 every year we are paying. We are paying 30,000 every year, which includes this interest amount also. So we are paying 30,000. So how much is due? 88,000 minus 30, that is 58,000. Okay, so third year the amount due is 58,000, right? Again, interest at the rate of 10%, that is 5,800. And how much we are paying? Third year also we are paying 30,000. So amount due is 8, 5, 13, 63,800. Okay, this 30,000, again I am repeating, is inclusive of interest. Okay, so this include interest. We are paying equal installments of rupees 30,000 every year. 63,800, sorry. So how much will be due? 33,800, that is 63,800. And in the fourth year, amount due is 33,800. We will pay interest at the rate of 10%, that is 3,380. Okay, how much we are paying in the fourth year? Fourth year we are making the final payment of 30,000, and whatever is due we will pay in the fifth year. So we paid 30,000. How much it is? 8, 0, 8, 9, 10, 11, 1, 7, 37180. We paying 30,000, so amount due is now 7180. Okay, in the fifth year we will make the final payment of fifth year. The amount due is 7180. Okay, this is the opening balance, 1st April. Now we need to pay the interest on this also at the rate of 10%. Mind it, interest at the rate of 10% in the starting of the year. This is the amount. Okay, so for the whole year we are using this money, so we need to pay interest. So interest at the rate of 10% is 718. How much is total we are paying? 7898. So we will make the final payment of 7898. 98. Okay, this is the second situation wherein it is mentioned that if we are paying the 4 yearly installment of 30,000, that particular amount includes the interest amount. So we will not add it like that. Like in the first situation, we are paying the 4 yearly installments, we divided the principal amount into 4 equal installments. Okay, and then we are paying the interest amount also, wherein here it is being mentioned we are paying the 4 yearly installment of 30,000, which includes the interest amount. Okay, so this is how we will make the C's loan account. Wherein there is a third situation also. The third situation could be we are paying, let's say, same, we are considering 4 equal yearly installment including interest at the rate of 10%. Here it was mentioned the amount 30,000 includes the interest amount. Here it is not mentioned like how much interest amount, like we know the 10% interest rate, but this particular thing includes the principal plus interest amount. Now how to calculate, how we will know like this is the amount we are paying and we have divided this particular amount into 4 equal installments. Now you have all heard of EMIs. Okay, easy monthly installment. Okay, when we are taking loan from the bank, okay, or any kind of a financial institutions, we need to pay loan. Okay, we are taking a loan, let's say for the cars, for a house, we need to pay loan, and they divided, like we divided it to monthly installment, or there could be an yearly installment. Okay, how they do it, there is a formula for that. What is it called? It is called the amortization schedule. This is the amortization schedule. You have heard the word amortization. Okay, when did you heard the word? While calculating the intangible assets in your 11th standard. Okay, depreciation, tangible assets, what we do, we amortize the intangible asset, right? So here also we are amortizing the loan amount into equal installments, and that particular loan amount includes the interest amount. So there is a formula for that. Okay, what is the formula? This is the yearly installments which we will pay. The principal amount I 1 plus I raised to n divided by 1 plus I raised to n minus 1. This is the formula. Okay, any kind of installments you need to pay, just apply this formula. It's easy to solve, right? Now I will explain in my next video maybe like how to calculate this, I will bifurcate it and explain you how to do, like what does that particular amortization formula mean. Okay, but for now, in your future, you are going to study about this annuity table and amortization schedule. Everything you will study. But let's say for now, if it is being mentioned that you need to pay the 4 equal yearly installment, which includes the interest. So the whole principal as well as the interest amount is divided into 4 equal yearly installments. Right now, you don't know how to calculate it. It includes 1 lakh plus 1 lakh. You are paying the interest amount. Again, certain amount is due. Again, you are paying the interest amount. How much you will calculate? Okay, so this is the formula to calculate the yearly installment amount. Okay, now I is what here? P. Let's say P is the principal amount. Okay, I is the interest. Okay, and N is the number of payments. If it's yearly payment, and if it is monthly, we need to divide it by 12. Okay, so now here the principal amount is how much? 1 lakh. Okay, interest amount is how much? Interest is 10%, that is 0.1. 1 plus 0.1, this is a compound interest factor. 1 plus 0.1 raised to n is the compound interest factor. Okay, we'll talk about it later. Divided by 1 plus 0.1 raised to n minus 1. Now let's solve this. For this I need a calculator. Okay, I can't solve these things without a calci. Not, my mind is not so sharp, right? Okay, so 1.1 raised to 4, that is 1.1, 4 times we need to multiply 1.1 into, so this is 0.1 into 1.4641 divided by 1.4641 minus 1. So how much it will be? I am showing it here. Lack of space, and I needed to explain you everything in one particular place only. Okay, so this is 1 lakh. A equals to 1 lakh. 0.1 into 1.4641 we will multiply. It's 0.14641 divided by 1.4641 minus 1, that is 0.4641. Okay, so divided by 0.4641 equals to is 1 lakh into 0.315470. We are taking the 6 digits after decimal. Okay, so this could be 31547, 31,547. This is the yearly installment we will pay to the retiring partner every year, 31,547. Now let's see whether, like, we have to pay this 4 yearly equal installments. Let's see how it goes, right? So in the first year, the amount due is 1 lakh. Okay, interest is at the rate of 10%, that is 10,000. How much we are paying? 31,547. So 110 minus 31,547 is 78,453 is due now. Okay, 110 in the first year we make the payment 31,547. Now in the second year, amount due is 78,453. Interest at the rate of 10% is 7845. So 86,298. Out of that we already paid 31,547. We paid 31,547. Now the amount due is 54,751. Okay, now in the third year, again the amount due is 54,751. Interest at the rate of 10% is 5475. We are making a payment of 31,547. Now the amount due is 60,226 minus 31,547, that is 28,679. Now in the fourth year, this is the last year where we need to make the payment. Okay, amount due is 28,679. Interest at the rate of 10% is 2868. So 31,547. This got tallied and we make the calculation proper. 31,547. Okay, so this is the amortization formula which you need to, wherein you need to calculate how you are making the equal yearly installment, which include the interest amount also. Okay, I hope you got all these three situations right. I want you to do practice. That is what I always say. If you want a hand-on accountancy subject, first and foremost clear the concept. Before clearing the concepts, if you do the practice of the sum, sometimes you will get it, but still, you know, when the concepts are clear, any difficult situation you will be able to solve it easily. So clear the concept. After clearing your concept, solve the examples, solve as many examples as you can, and then we are going to discuss in the next video the remaining topics. So see you in the next video. Till then, thank you very much. Okay, so while editing, I made a mistake while explaining you one particular topic. So I just want to clarify about that. Here, when I said that the partner, retiring partner, will get a share in profit based on the capital involved. By mistake, I took the profit sharing ratio 2:2:1. No, we are not supposed to consider that thing. Maybe 4:4:1. We are not bothered. But let's say the capital involved, total capital involved of the other two partners plus his amount is 5 lakh. Okay, so this is the total capital involved. Okay, total capital of the partner as well as his share is 5 lakh, and the amount due to him is 1 lakh. So the how much share he will get in the profit is 1/5. Okay, 1 lakh divided by 5 lakh. Okay, so C will get 1/5 share in the profit. Profit sharing ratio we are not supposed to consider. We are supposed to consider how much of the profit is involved, how much of the capital is involved. Based on that, we will give a share in the profit. If it is 8 lakh, total capital is, let's say, 8 lakh, then his share will be 1/8 and he will get 10,000, like that. Okay, I hope you got it. I'm really sorry for making that mistake. See you in the next video. Till then, thank you very much.